In today's video, we're going to talk a little bit about the timing in the S&P, and in retrospect, I actually look at this and say this was probably the biggest omen by itself. 6 bars down, 6 bars down, and 6 bars down. Okay, just that combination of numbers. But one of the things that you have to remember is what we had as far as the timing work was concerned was, you know, at least these 4 cycles here, 20th, 21st. I also had posted the histogram a while back on Twitter, you know, as we were testing this time window. And even though we pulled back into some support and it looked like we were going to follow the path of least resistance, since this timing high was still considered key and pivotal, you still always have to watch for possible failures underneath it. So there's the double top that everybody's talking about, but what do you do now? Okay, so this is the way that I always look at it, and I'll typically do the price work on the S&P futures rather than cash, because most of my traders are in futures. And I will show you that we did pull back into support today. That was posted on box.com and all that good stuff. But here, notice that this decline from the September 21st high to this low was, actually let me make sure that I've got the right label here. So this was a decline of 59.25 points. That is very similar to another decline of 61 points here. And then it's not that different from another decline of 58 points here. Okay, so this is part of what I had as far as the you know, support that I had actually posted on my site, and also for Real Money I did put out the potential support on that. This is what you want to watch. If the decline now is only similar to some of these prior declines, you have to be prepared for a possible resumption of the rally. Now, I'm not going to tell you that this is definitely a major low, because I don't know if that's the case or not, but I will show you how you use this work once again with a trigger. The way that you make money with this work is setup plus trigger equals trade entry, and then you manage it. So we did break actually quite a bit of higher support before this was tested. But you look at this cluster zone, either 2880 to 2889, or you could actually tighten that up by just using the smaller zone, which would be 2884.5 to 2889 and change. And if the zone holds, you go down to a lower time frame chart. Now, most of my traders that are doing the S&Ps are using something like either a 144 tick or a 233 tick chart for a trigger, because that will trigger you in relatively close to where your risk definition is. So here's where we tested that lower support on the daily chart in the S&P E-mini, and here's where you had your first signal when you took out, or when you had the moving average crossover, the 834 EMA crossover to the upside, and also in the process you took out a prior swing high. So at this point you're allowed to be a buyer with a stop underneath here, and there was a rather dramatic you know, short covering rally since then. I guess we can only see that on a 30-minute chart. That would be from this low to this high. We've seen a rally of 22.75 points so far. Actually, some of this was just made after the market closed in the after session, but you know, that's what we can look at, because ultimately I don't know if we're just going to run into resistance and fail again. But what we did know, and what you can work with, is the fact that yes, there was support here on the daily chart, and yes, it did actually trigger an entry on a 233 tick chart. That's a trade. Okay, we ultimately don't know where the market's going to go, but if you have a trade set up and you use triggers with it, that's the way that you make money with my work.